more, so they were trying to get ahead of the Fed cuts. And so you can see the value of the dollar coming down. And then you see when the Fed stopped cutting rates, the value of the dollar pretty much stabilized and bounced around in the same area. And look at what happened to oil. Oil kept going up, but when the Fed stopped cutting rates, oil kept going for a few months. Why did that happen? Because the financial markets expected the Fed to continue to cut rates. And so they were, again, trying to get ahead of the Federal Reserve. And since they expected them to cut rates again, they would kind of try to get ahead of it. And so the jump from 120 a barrel up to 145 was pure speculation. And when the Federal Reserve had a meeting and made it very clear that their next move was more likely to be a hold or to raise interest rates, within a couple days, that completely evaporated. All that speculation went back, and we went back to where we should be based on what the value of the dollar is, which is bouncing around somewhere between 110 and 120. And so, and that's where the price of gas, that's how the price of gas has gone up and then back down. I think we're going to look back at that $4.25 a gallon gas. That will be the record, and we'll have that record for quite a while, unless you have something, Iran does something stupid in the Middle East, or, Russia and Georgia. That's a hornet's nest that could cause bigger problems because of that. That's an oil producing region. Russia is a global oil supplier. There's a lot of pipelines in those areas. If that spirals out of control, all bets are off on the price of oil. A major hurricane running through the Gulf. Right now you've seen a slight increase in the price of oil, which means you'll probably see a 5 to 10 cent increase at the pump over the next few days. It's because Gustav is going through the Gulf, and it's going to shut down production on those oil platforms while the hurricane's moving through. If it's only a category 3, it's just until it passes by, then they'll start them back up again. If it gets worse than that, it could actually damage some of the platforms or some of the refineries. And if that happens, they're offline longer, then you'll see prices stay up a little bit longer. So you need to watch the value of the dollar and the Weather Channel to know what's going to happen at the gas pump. But you'll notice right here, what happened here, look at this value of the dollar has grown substantially. And that's caused even additional cuts or drops in oil prices. And this occurred for 2 reasons. One, it became very clear the Fed's going to probably start increasing rates. And 2, the European economies and Asian economies are now slipping into a recession. They're starting to see the fact that they couldn't avoid this. That they were, originally last year thinking, oh, we're better, we're not, it used to be the old adage when the United States catches a cold, that the rest of the world gets the flu. And they were thinking, oh, well, hey, maybe this is the time we won't get affected by that. Well, it's looking like they're slipping into a recession as well. And so they're looking at cutting rates. So now they're cutting rates and we're not. And so our comparative value of the dollar goes up.
This whole thing goes back to Greenspan. When the administration was pushing Greenspan up the rates, they lowered the rates, and that started this whole housing thing. If Bernanke would raise the rate back up where it belongs, the price of oil on the distributor out there went up today. If he would raise the rates back up where they belong,
That's correct. You are paying for this housing crisis at the pump. It sounds counterintuitive, but you are. That's exactly what's happening. The real problem was when they started raising rates after the recession of 2003 ended, they stopped at 5.5. They shouldn't have. They should have kept going. And they stopped for 5.5 for too long. And that was a real problem. That caused a lot of this oil issue. It really inflated a lot of the housing that was going on. If those rates had kept coming up, it would have put a governor, small g, on the whole housing issue, and it wouldn't have been as bad. Yeah.
This kind of goes back to Senator Johnson's stuff. There's a lot of concerns about long term buying up what America does. How does this compare to several years ago when same worry about Japanese buying up America? Didn't we kind of end up balancing that out?
It does, and that's things swing back and forth. And my concern, in generally, you don't worry about foreign investment here because that's a sign actually that they have confidence globally in our markets. I mean, you don't invest in some place that you think is going to go away or be, is overinflated. They're seeing this as a buying opportunity, which it really is. In fact, in housing, in the next year, you're going to see some of the best deals you're going to see probably in your lifetime because the deflation is coming down. We're going to see prices as low as what we're going to see over the next year. So from a buyer's perspective, it's a great buyer's market. But you got to have a long-term view. You got to be planning to buy for the long term. The issue you have is when it's strategically related type of purchases, and depending on whether or not there's some sort of regulatory control. Our federal government has a lot of regulations, too many in my opinion, but whether it's foreign investment or local investment, they're still going to be able to do those regulatory environments. And frankly, if we get into war with one of those countries, we're just seizing those assets anyway, and so we'll just get it back. So to some degree, it keeps them from it's the old adage, no two countries who have a McDonald's have ever gone to war with each other. Think about that. Having their investment here gets them not only interested in and invested in our way of life and capitalism and freedom. And let's think back to what happened with the Soviet Union. It was when they started opening up the press and starting to build capitalism, it didn't take very long for the entire Soviet Union to collapse and go under. And that's the type of thing. So having them invested here, in my theory, actually has a good long-term effect on peace, because you're going to have the players that are financial players saying, "Wait, we don't want you to start messing around with the United States because we may lose our investments." And that's somebody's retirement, over on the other in other countries. Yes.
Mr. Treasurer, I just wanted to tell you we've got about 30 minutes to wrap it up because I want to have a few minutes at the end where we can discuss.
Okay.
I'll just give you a warning.
I've given you a bunch of statistics, bunch of numbers. What's a quick and easy guide to how the economy's doing? Just drive by your local Starbucks. This is my Starbucks rule for the economy. If you go by a Starbucks and this is what you see, people still paying $4 and $5 for a cup of coffee, the recession is not that bad. They still have disposable income. Now, if you drive by your Starbucks and this is what you see, they're all boarded up, that means it's a moderate to severe recession. People don't have the disposable income that they otherwise would have. Now, in these cases, these two were hurricanes they were boarding up for, and this one, the WTO, was coming to town. So they apparently in Seattle, the WTO comes to town, they board up everything. But you'll notice what's happening right now, 11,000 Starbucks stores in the nation, and they're closing about 600 of them. They're only closing one in Arizona, and that's in Eloy. Where's Eloy? It is now the farthest extent of the East Valley of the Phoenix metropolitan area. That was really where it was the extent of the growth. And guess what? It hasn't grown enough to justify. They were trying to get ahead of that growth and get good locations, and they just went too far. So overall, the long term is still good here, but it's just going to be slow for a while. Now, if you drive by a McDonald's and you see it all boarded up, that's what we call depression. Because now people don't have 99 cents for a cup of coffee. So, my economic forecast. Now, in full disclosure, this is my forecast, so take it for what you paid for it. But just to let you know, we actually warned the legislature, I testified before FAC, that we were going to have a slowdown or recession, not this March, but last March, back in 2007. So we were warning that this was coming. So here we go. First of all, to understand this, you got to understand the economic cycle. You have a bubble that bursts. You have what I call the crash phase. Crash phase is where all the news is bad and getting worse, and everything just sounds terrible. Then you have what I call the first turn, and that's where things are getting worse, but at not as bad of a rate as before. And how do you know you're in the first turn? Well, you hear bad news and you're happy about it. Why would you be happy about it? Because you thought it was going to be worse than what it actually was. I'll give you a perfect example. Citibank, they've lost about $50 billion so far in this whole credit crunch housing process. They gave out their second quarter returns. And what happened to the stock market? It shot